Hello, good evening from London, and I'm here today to share with regards to the banks buying homes and the impact to landlords. So, according to the Financial Times, Blackstone has closed a big deal, £500 million, £580 million with Vistro, and this is to build 1,700 or over 1,700 homes. And this isn't unusual in today's world, at least, where we're seeing more corporate companies and more funds buying up properties. It started in the US a few years ago, and now we're seeing it here in the UK. And by the way, a lot of these companies are coming from the US, but also a lot of these corporate companies are also based here in the UK. Now, this is in contrast to over 30,000 landlords selling up. And these are small-time landlords. So there's a contrast there, right? Small landlords selling up, big corporate companies and landlords coming into the market. So I just wanted to unpack that today and find out your views. Again, I always love sharing a lot of data, but also love most of all is hearing your perspective on this. Now, as always, I love to just make sure at the beginning of every of these live streams, making sure that audio is good and you can see me. So I don't know who is online, but I can see a few people. We're just being joined from different platforms. And we've had Edmund, Stephen, James. Hey, Stephen. Again, just want to make sure if any of you could tell me you can hear me. Amazing. That's always great to know. It's good, very, very helpful. So today we're going to be looking at a few articles, and it is going to be very much based on institutions and banks looking at what they're buying, first of all, their strategy, but also just looking at the impact it's going to have not only in the overall rental market, but also on landlords. And this is more so on smaller landlords and the trends, really. So in recent years, as I said, we've seen quite a few banks enter into the property market. Now, a few of these are going to be, but not exclusively, like General, who is, of course, the, let me just bring this up, Legal and General. John Lewis is another big one as well, and this is just the beginning. You've got Granger, you've got MNG Investments, Nest, Aviva Investors are also entering into the space, and we're going to be diving into this. But first of all, let me share my screen so you can see the article from the Financial Times. So this article, as you can see here, Blackstone in the UK rental housing push for £580 million with an Vistry deal. So again, this is the build to build over 1,700 homes. So Blackstone has reached a deal with the house builder, the £580 million deal Blackstone and its minority investment partner Regis mark the second big transaction with Vistry in 8 months. Now, this article is from June. So around about a couple of months ago. The UK rental sector still largely relies on small private landlords for now, by the way, for now. But big money managers are increasingly moving into the market. Now, I wanted to unpack something on this. So, small landlords at the moment do make up much of the market, and it seems that the government is betting on the corporate companies and institutions filling that gap. The biggest issue right now is, I believe that that is true, but then there's going to be a gap. What's going to happen between sort of next 2 to 5 years once all these buildings are sort of completed and you get more corporate companies? This is mainly to do with the build to rent strategy. So again, there's going to be a gap there, assuming that they can fill up that gap. And I think they can, they eventually will. But then there's going to be that time lag of, I don't know what's going to be, let's say 2, 3, 5 years, where I believe a lot of renters are going to be impacted hugely. So just want to get that out there. Going back to the article, if I may. So as I was saying, the UK rental sector still largely relies on small private landlords, but big money managers are increasingly moving into the market. Now, residential properties have weathered the downturn in commercial real estate caused by high interest rates better than many other sectors. Institutional private capital can play an important role in providing high quality housing stock across the UK, particularly the private rented sector. Now, Blackstone has a long invested in houses in the US. Surprise, surprise again. There are a lot of companies that have started this structure already in the US. I speak to quite a few agents and developers out there, and they told me, Danny, this is coming to the UK. And this is because the market is underserved here in the country, and the demand is strong because there is a lack of supply. And so that is a strategy coming in. Demand is strong, market's underserved, great opportunity, and they're coming in. And some of these institutions may surprise you, but I'll share a little bit more about that shortly. So, the properties built under Tuesday's deal, which is back in June, will be managed by Leaf Living, a company launched by Blackstone and Regis in 2021 to manage single-family homes to rent in the UK. Already has about 500 homes. A second company, Blackstone Backstage, has a portfolio of 1,600 affordable homes. So, private equity investors in housing have faced skepticism about driving up rent and treatment of tenants. So before I go on with this, again, this is at a moment whereby we have many landlords leaving the market. Uh, Bear with me one sec. So it seems I may have a problem with volume. Is my volume still good? And the sun is out, so you might see me very bright. Bear with me one moment. Let me try and fix this problem with you guys right now. You tell me if this is somewhat better. And then if I get too dark, you just give me a shout. Is that all good? Hopefully, I don't look like I'm going to go flying away. I'm just waiting for someone to confirm if the brightness is better. Hopefully it is. In the meantime, I will share with you that we also have a deal that's been struck with a private equity firm. Bear with me one sec. Bum, 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 bum. Let's look at the key drivers to the institutions coming in. So first of all, we've got the stable long-term returns. So rental properties offer consistent cash flow, of course, as you know, particularly as long-term tenancies become more common. And these long-term tenancies, by the way, isn't just based on tenancies and people sort of securing those tenants, because we know that the government is changing the tenancy agreements. So we're moving from a fixed term tenancy to an indefinite tenancies from tenants, but then tenants are going to be able to provide a 2-month notice. So it's no way kind of locking in those tenants, but it's more so the desire that we're seeing more so, especially here in London. The norm has now become sort of 24 months to 36 months where tenants want to stay in their properties. And of course, that may be because of the lack of properties going on at the moment. But anyway, build to rent provides a stable, low risk investment compared to other real estate sectors. Now, you've got the government support, which there's an article that I want to share with you. And let me just jump into that right now, actually, because this is something that surprised me, may have not surprised some of you guys out there. But we have here this one here. So moving away from big banks, let's look at this article. Government backs massive build-to-rent investment by global finance firms. So the Labour government pension minister, Emma Reynolds, and by the way, this article is from September, so 24th of September, so just a week ago. Shadow Housing Minister has welcomed a huge investment scheme for build to rent. But who's this from? So this Reynolds has spoken out in favour of an announcement by the UK pension scheme Nest. If you're familiar with Nest, it is a pension scheme. So it seems that a lot of shareholders that have bought into this pension scheme are going to become landlords themselves. So I feel there's a bit of a hypocrisy here, whereby we are bashing landlords, but then it seems like by by default, a lot of us are going to become landlords ourselves. At first, the two sources will combine to put some 350 million of investment into build to rent, extending existing LNG initiatives. Reynolds said statements. Today's announcement highlights the opportunities for our pension sectors to contribute to our communities and grow the economy. It's interesting how that narrative has changed, whereby we're now investing in communities when it's nest investing, but then when it's small time landlords, then the landlords are um, somehow villainized. They are a lot of landlords sort of, you are hoarding properties and you are not being, to say in other words, not being ethical. And being a landlord isn't right, but somehow Nest invests and they are, the good guys, and they are in some way investing in communities. Interesting how that happens. So, what else do we have? The government landmark pensions review seeks to unlock billions of pounds of investment in the UK economy and drive pensions capital into long-term growth assets to make every part of Britain better off. So we're making Britain better off with building more properties and Nest becoming landlords. So it's believed that the new build scheme comes as a result of the investment are in locations already lined up. All new homes will be targeting net zero in 2030 and will be built on brownfield sites in city centres. A spokesperson for Nest says, "We have been carefully considering the UK market and where's best to invest so that we can help boost our members' pensions and support the economic growth." So their investment has two folds here. So one is to look after their shareholders, but also to boost the economic growth, as you can see. So after working with LNG for many years, we're delighted to extend our partnership into this new area. LNG and asset manager service PGGM have already been successfully investing in the UK build to rent. So I'd be very interested to find out your thoughts on this. So here you have, since 2016, LNG has deployed over 3 billion of capital into build to rent sectors, delivering more than 10,000 rental homes, forming a key part of its growing residential platform. So guys, I'm interested to hear your thoughts on the big banks buying up properties here in the UK. And it's not only the big banks, but also institutions like Nest. So let's see here with some of the questions. Do you think smaller landlords might struggle to keep up as these big financial firms buy more properties? I think that the game changes. Certainly, these new properties are going to be buildings that offer better amenities. Of course, they are new. They are going to put in a different type of target audience. So, depending on where your property is, absolutely, I do believe that. Bear with me one sec. I do believe that there's going to be the competition, at least, is going to change. So I made some notes here actually in terms of how that's going to change. So the rise of build to rent involving banks and institutions will change the landscape for landlords. So it's going to be more professionalized for sure. I mean, that's already happening with the changes with Labour. It will lead to sort of dominated by these corporate companies. And it's going to be in certain regions. I mean, these companies aren't silly. They are investing in regions whereby they know they're going to get a return, whereby they know that the target audience and the type of renter that they're looking for can afford to pay for these type of properties, which again do offer some great amenities. Now, some argue that these institutional investment as much need to supply to the rental market. Now, of course, this is going to somewhat, I'd say, be against some landlords, but I think that competition is good. I think standardizing, having a standard in the market is a good thing, because the truth is, if you're a landlord whereby you have an old property, you're not investing in it and you're not keeping up with it, that isn't the way to go moving forward. You probably can get away with that with a market whereby it's high in demand, but you don't want to be in a position where market shifts, and it will ultimately shift because booms don't last forever. I'm not going to say that there's going to be a bust, but certainly with more competition, you just need to keep up. Um, so the shift towards corporate ownership of rental properties raises legitimate concerns about availability of the housing stock and traditional buy-to-let investors, as more properties are built or acquired with the sole purpose of renting. Similar landlords may find themselves edged out of larger players with greater financial clout. And there is a danger of that. And again, it really depends on what region you're going to be in. So going back to your question, I hope that somewhat answers your question, Edmund. And then we have another one here from Stephen. Danny, do you think if there are any upsides for landlord with all these big players coming into the market, or is it mostly going to create problems? I'm not sure I see it. I see professionalism in the market as an upside. So that's number one. I mean, that's already happening with the Renters' Rights Bill, too. Um, and I think that perhaps also, um, I say, sort of leveling up or making the standards higher, I think can only be a good thing for everyone as well. So I see those two upsides. Other than that, I'm not exactly sure if I see anything else. Yeah, I'm not sure if I see anything else. It's interesting to see as to the government supporting these institutions and these banks to enter the market. You know, is this part of their big plan? It seems to build 1.5 million homes over the course of 5 years. It may well seem to, incentivizing big developers, small developers to build more homes, whatever the means. And if that means sort of pushing out small landlords, then so be it. The question is this going to be at the benefit of tenants and renters who Labour Party claim to be helping? I don't know. As a renter, as a tenant, do I prefer to be sort of in a relationship with a smaller landlord who has a couple of properties, down to earth kind of thing, local, very likely sort of invest in the local community? Or does a renter tenant want to be dealing with a big corp where profits very likely won't be even invested back into the community? If you're a renter, if you're a tenant, I mean, I know that most of our viewers are landlords here, but if you're a tenant, a renter, it will be interesting to find out what your views are on this. Okay, cool. So we have Samantha. I've heard that these banks that are buying homes, this could lead to more collaboration between small and big investors. Um, I don't think when it comes to smaller landlords, I don't think there's going to be much collaboration. I can't see it, that, Samantha. Perhaps with those kind of middle um, landlords, sort of, have a reasonable size portfolio. But with a landlord that has a couple of properties, I can't see that much going on in terms of collaboration, from my point of view. Andrew, how should landlords adjust their investment strategies to deal with these big financial firms buying so many properties? In my opinion, I believe that if you are in a region whereby you have some of these same corporates investing in your region, I don't think there's necessarily any fear or concerns of getting out, but it certainly makes sense for you to invest or keep your property up to date so you can compete with these, assuming that it's to the same target audience. Now, remember, if your target audience is a working professional and you're, I don't know, let's say in a part of London and your property is run down, you're going to struggle securing the right type of tenant, which is going to become more important now than ever with those new regulations that Labour come in. Now, for you to attract the right tenant, your property needs to look great in comparison to the competition. And so I hope that makes sense, Andrew. You need your property to look its best to attract the best amount of tenants and not be taken away from all the other corporates. I hope that makes sense. Okay, guys. I want to share with you the next possible article from here. I shared with you the government backing the nest scheme. That's all done already. The next article I have here, I guess this is interesting. Um, as I said to you, this comes at a time when smaller landlords are actually selling off. So out goes the smaller landlords, in comes the corporate companies. Has this been the big plan from not only just the Labour government, because we had sort of the Conservatives not being very landlord friendly to begin with, but has this been the the plan of government to begin with over the course of the last few years? If we look back to the Osborne era back in 2016, what we do know is, him pushing for a stamp duty for second homes, though trying to steer landlords away or investors. We had the Section 24 introduced, and that the removal, of course, of offsetting mortgage interest, removing the wear and tear and replacing it with some other ridiculous with a cap. We also had, of course, the tenant fee ban, which had an impact on landlords' pockets. And then, we have this new regulation, which used to be called the Renters' Rights Bill, being rebranded, repackaged to the Renters' Rights Bill by Labour. And it seems that, they're happy for landlords to kind of be pushed away and have the corporate companies come in. Again, your view and this would be great. But in the meantime, let me just continue sharing this article with you guys, because I could probably digress with your questions. But here you are. So you've got the mass sell-off is currently underway. This article is less than a month ago, so 3 weeks ago. Sector, and it only looks set to increase. EPC requirements, the renters reform bill mounting financial pressure, as the list goes on. By the way, they haven't even mentioned about the capital gain tax potentially in in a 3 weeks time. By the way, guys, if you're listening into this, remember we got that schedule. That debate for the Renters' Rights Bill scheduled for the 9th of October. And of course, we've got the budget at the end of the month. So big news to come up. If you're not subscribed to the channel, make sure you do so you can keep up with everything. So no doubt you've seen the recent headlines of the landlords, if you're forgiven for thinking of the word. So this is just talking about why landlords are leaving. Labour's plan are ramping up what can only be described as a final blow to landlords with measures that could prevent landlords from evicting tenants who failed to pay their rent. This is all in the Renters' Rights Bill. And by the way, we did a video of this. So if you haven't seen it, make sure you check it out. It was posted on Saturday. We'll make sure to put it on a comment on the description. So Shirley, a landlord from Scotland who contacted Portfolio exit specialist landlord sales agent, said she had to get out because her landlord portfolio era was over, echoing the sentiments of an increasing number of landlords who are flooding in every week to sell off and get out. It'll be interesting to find out with you guys if you're having the same experience where you are in the region or neighborhood where you are. Are landlords really selling like hotcakes? And I know that it is a particular landlord who's doing these, guys. I know those bigger portfolio landlords are actually scaling up. We've talked about this before. So we've got David Cohn, founder of Landlord Sales Agents, described the current climate as a landlord exodus, stating that landlords just can't come to us fast enough. If we thought we were selling off a lot of properties last year, since Labour came in, the number of landlords wanting to sell is through the roof. I'm one of them. I'm selling the majority of my portfolio, keeping only the best performing properties. Now, listen, guys, I don't want to be accused of scaremongering. Yet I will say that there is a lot of scaremongering. Now, whether that's the media, news outlets, YouTubers like me, one thing I will say is that there are landlords that are staying in the market. And that could be for a number of reasons. Now, I did read an article the other day, and what I did see was that landlords that had properties, more than 5 properties, were scaling up, and those who had 10 properties were scaling up even more and had even more confidence in the market, and actually welcomed other landlords leaving because they were looking out to take on board more properties over the course of the next couple of years. The question is, what keeps landlords in the buy-to-let market? And this is something that I did want to look in. I'm going to be jumping in and out um, of articles, so forgive me, but this is something that I did want to share with you. And it's this article here. What keeps landlords in the buy-to-let business? New findings. So what really does? So here are the key findings, guys. Number one, long-term rental demand. What we know is that rental demand is going to continue to happen, especially when we look at uh, regions, urban regions, and the cities. We know that population is growing. I know that it's growing here in London, at least. It was something around the lines of 10% over the course of, I can't remember if it was a couple of years. But most importantly, looking at it from a macro point of view, we know that at least half the population lives in urban areas. These are big cities or close to these big cities. Half the population, guys, this is 4 billion people, and that's set to grow something in the region of doubling by 2050. So that rental demand is going to continue to happen, and these big corporate companies know it, and that's why one of the reasons these landlords are also wanting to continue to stay in the business of buy to let. But of course, they're going to have to ramp up their strategy, given that these corporate companies are coming in. Retirement income. Over half of landlords, 54%, are looking. Where am I gone? Half of 54% are looking to add properties to their portfolios as a means of supplementing their retirement income. So, as you can see, guys, even though there are a lot of landlords exiting the market, this articles from the 29th of August 2024, and it is saying that half of landlords are actually looking to increase their portfolio as a means to supplement the retirements. So be careful as to what you're reading on in the media. The buy to let isn't in any way there at this point in time. It's just the way that you are doing business has changed. And if you don't change, then you are going to find yourself in trouble. Capital appreciation. Nearly half of the respondents, 47%, believe that long-term house prices growth is a significant driver for their investment decisions. And preference for property. Over a third of landlords, 34%, prefer property as an investment asset over other options. And this is for a variety of reasons. I mean, what we do know, of course, is that property is a tangible, right? It's very different to kind of shares or stocks. You also have control over property to an extent. You can pivot with property, whether it's I want to start to do short lets, whether I want to move in or I want my family member to move in, I can sell up. It just has, I want students, I want a professional. You have so much flexibility with property. You can pass on property as well, and you can build generational wealth with it. You have the 3 buckets with property, of course, as many of you already know. If you're in buy to let, you've got the capital growth, which is where you're going to win with property. You have the tenant paying effectively your debt, but also, should you get lucky, you can also get cash flow from it, which of course the yield that you're going to get. So a lot to do with property in comparison to shares, bonds, or dare I say even crypto, which, if we're going to talk about crypto, we can talk about how volatile it is in comparison to, of course, property. So I wanted to find out here if you have any further questions. You've got Andrew. I think we've read this one. So should landlord adjust the investment strategies? Yes, we talked about that. And if you're just joining, guys, we have talked about the major banks entering into the build-to-rent sector here in the UK. But it's not only banks. We are looking at also institutions such as Nest, who are, of course, ramping up and started to buy land and go into the build to rent model. So a lot of shareholders suddenly finding themselves as landlords indirectly, which is interesting. And then on the contrast of that, also seeing that 30,000 landlords have left the market. I can't remember if that was in a space of a couple of years or something like that. 31,000 selling in 1 year, which again is very interesting. Actually, let's look into that article whilst we're on the subject again. But before that, we have Martin who's been asking a question. Bear with me. So what we have is, would be great to know your suggestion on raising interest rates. How should landlords manage mortgage repayments without drastically raising rent? I'm not sure how you would do that. I only have perhaps two suggestions for you, Martin. Number one, you get yourself a very good broker. And if you don't, you need to, if you don't have one, get one, number one. And number two is you're going to have to raise rents. Or if you don't want to raise rents to tenants, then perhaps explore the short-term rental market, which will provide you with a better yield. I know you can't do that everywhere, or you can only do that for a period of time, but I certainly would advise that you look at the short-term rental market. I'll give you some example of some numbers. We saw one of the landlords very recently switching from a long let. So on the long let, they were achieving in the region of around about £40,000. After they paid the agent fees and management and everything else, they were left with £32,000 in their pocket. Yet once they switched to a short-term rental, they were earning in the region of £80,000 plus. And that is on a 90% capacity. If it was 100% occupied, it would be almost around about £100,000. But in this situation, I think it was like £85,000 after paying fees, portal fees, and everything else. I think they were left with like £50,000. So it was a £20,000 uplift. I hope that tip helps for you, Martin. Danny, do you think what impact Brexit has had on rental market, especially when it comes to housing demand from EU nationals? Oh, that's a good question. Yes, 100%. It had an impact on Brexit. Whether it continues to have a lagging impact that Brexit has an impact on property. Whether after a few years it continues to have an impact, I don't know. Would be an answer. I would say yes, but the question would very much be in which sectors. Is it in family homes, in which regions, and in which price at which price point? So, for example, I know Labour at the moment with their changes that they are planning with kind of non-doms and so forth. I know that the super prime sector is definitely going to have an impact. Already started to have an impact. So yeah, that I guess that I would answer it by asking another question, which would be yes, and yet what regions and what price levels would it be having an impact on? So let's jump on to the next article, which we were talking about the landlords exiting the market. So landlords exiting our market. So we know that 31,000 the last year has exited the market. The figures also reveal that households facing homelessness as a result of landlords selling the property has reached 45,000 people in the same period. Another record high, 3,000 more than the previous financial year. Of these, 31,000 landlords were selling and 13,000 landlords were reletting. If it says that while widely expected ban on Section 21 will stop some evictions, it will not reduce those triggered by landlords exiting the sector. So for those, the campaigners want longer notice periods and financial support to move. Interesting. So there is evidence to say that because of the change of regulations and because of the fear of landlords selling up, then that has naturally resulted in an increase of homelessness. Interesting to find out, the stats on that. And that being said, this weekend we have the stats coming out for short-term rentals and whether there's any truth about long-term rentals to short-term rental, Airbnb to be more specific, taking away properties, stock from the short term, from the long term market. So that's going to be interesting to dive into that and find out. So if you guys are interested about those stats, make sure you jump in and dive in. Okay, guys. Any other questions? For now, I can't see anything here. So we're gonna dive into the Lloyds Bank coming into the market. And again, this is just one of many, guys. So we have Lloyds Bank Group boost portfolio of rental properties. So a subsidiary Lloyds Bank Group with operations, the bank build to rent portfolio has added just under 60 new homes to its portfolio. Citra Living now operates more than 4,000 properties, which 2,500 delivered and occupied. All 58 of the new Citra managed homes will be delivered to EPC B rating. And again, how can smaller landlords really compete with this? Andy Hutchison, Chief Executive Officer, Citra Living, says Woodhall Chase further strengthens our growing portfolio as we continue to pursue opportunities to create positive mix of housing in areas where people want to live. So again, guys, banks, institutions, and let's look at the whole overview of this, because Savills has shared with us the UK build to rent market update in Q2 2024. Reduced time to let to build to rent homes in 24 shows demand remains high. The second quarter of 2024 saw 1.2 billion of investment activity. That's interesting. When we look at this from a macro point of view, there is a lot of money pouring into this, where single family housing accounted for 816 million, 77% of the total. This is encouraging, and we expect momentum to build throughout the second half of the year. The build to rent sector investment thesis remains sound. There are still 30% fewer homes to rent across the UK compared to 2018 and 2019 average, a figure that has hardly changed since the start of 2022. Now, additionally, demand for build to rent has been stronger going by time to let data. It looks just 24 days to let a buy to rent home across 11 of the largest UK cities. So, I mean, just looking at this, guys, this tells us that they are focusing on major cities, and that time from actually putting the property to the market and actually letting isn't that long either. But again, as the competition becomes more and more aggressive, even between the corporates, let alone with landlords, I believe that gap is going to get bigger and bigger, because again, the markets do shift. That's what they naturally do. And at the moment, there is a lot of demand, rightly so, as Savills points out. There are 30% homes, fewer homes, but this is going to catch up at some point. And when that does, and we got this amount of properties that are for rent on the market, then that demand and supply is going to start to average out. Good news for renters? I think so, from one perspective. But then again, who are these landlords? These faceless landlords, these corporates are going to be speaking to a property manager and agents that are there only to meet targets. Whereas if you're dealing with a private landlord, it's a completely different story. So that's the way we're moving towards. Should renters be concerned about this or not really? Leave me your view. Double-digit rental growth was never sustainable, and we expect the rental market will now return to more normal seasonal patterns. And I agree with this. And, you know, if we were continuing to see double digits growth, I think not only tenants and renters should be concerned, but also landlords. It's just not sustainable. So demand for buy to rent remains high, with buy to rent homes in the UK largest city, which we just talked about. Our analysis shows that median time to let properties across the UK was just 24 days. In core cities specifically, average time to let buy to let rent build to rent homes has continued to get shorter. Here, the median number of days of build to rent home from 40 in 2018 So looking at the 12 months to May 2024, the average fell again to just 17. High demand in these markets means that homes have let faster on average than in London since Q3 2021. Even so, the average time to let for London build to rent has also fallen compared to previous years from 29 days in 2018, 2019, 26 days in the 12 months to May. The key reason is the lack of supply. In May 2024, there were 29% fewer listings compared to 2018, 2019, average across Great Britain. This partly because the tenants are staying in the homes longer and partly because buy-to-let landlords have reconsidered their portfolio due to high mortgage rates, with some leaving the sector. More rental properties are needed to keep pace. So again, guys, there is a congruency here and there is a pattern. Smaller landlords out, a lot of pressure, be that mortgage rates, the Section 24 regulations. But landlords, a lot of landlords are leaving the market, and they are very particular landlords who perhaps are accidental, didn't aim to be landlords to begin with. So I've got a message here by Andrew. Danny, do you think what impacts Brexit has had on rental market, especially when it comes to the house? Okay, we've read that already. Martin, how has the UK government push for greener, energy efficient homes impacting landlords, especially when it comes to renovations? I don't know the answer to that, Martin. What I will say is when you talk about green, I guess the biggest topic right now is definitely EPC. And landlords are not taking very well to it, to be honest with you. They are concerned about it. And the renovations that they're going to have to do to be able to keep up this to be able to be compliant. It's interesting to find out what kind of support the government is going to provide so that landlords can meet these targets, because of course landlords don't have deep pockets as do these big corporate companies who are building with the end in mind, of course, of making sure that they can meet these targets from the government, which the government is encouraging them to build. I hope that makes sense. Let's see if there's any other questions here. By the way, guys, if you want to digress a little bit, you can do so. We are here to talk about sort of different topics, mainly, of course, about these big corporates, but I'm all ears. So let's see this other one here. So we've got, based on today's discussion, is owning rental properties becoming too difficult or expensive for smaller landlords? You know, that's a great question. I actually had a meeting with a landlady who today, this afternoon, before jumping on, with regards to her property portfolio. So she had in the region, I believe, of 7. She now only has 3, which I believe a couple here in London, a couple up north, and she does want to sell. Now, she is an older landlady, and to put things into context, she's been a landlady for around about 30 years. And what she said to me was, Danny, if I had enough time on my side, and I wasn't the age that I am now, I'd ride this out because the properties have been good to me. They have provided the lifestyle that I've wanted and have helped me build more wealth and also to pass on to my children. But I don't have time on my side anymore, and therefore I'm exiting. But it's not purely just based on the fact that these regulations are coming in and that there is more competition. She said that she was 30 years younger. She'll ride it out because she knows that property is a source of wealth and property is a business. I know a lot of renters, a lot of people, tenants hate that term when it comes to owning property, but ultimately it is a business, and business has bad times. Sometimes you break even, sometimes you make profits, and she's had a good run, and she understands that if she rides this out, she'll have another good run at it as well. But she's deciding selling up, and those are the type of landlords that we are seeing selling up. There are definitely those older landlords who had a good run, or perhaps those landlords who didn't enter into the buy-to-let market with intention. They ended up inheriting a couple of properties or ended up owning a couple of properties because they moved out of their family of a smaller property, went into a family home, wasn't the right time to sell. Those are the landlords that are selling up, and those are the landlords that are obviously the media's picking up and saying there's this mass exodus. So listen, for anyone who's joining us right now, we are talking about very much those corporate banks, so the likes of Lloyds, BlackRock, but also other institutions coming in like Nest, the pension fund. Yes, the pension fund has moved in to the build to rent industry, and they are now becoming landlords, and consequently their shareholders are also becoming landlords. And it will be interesting to find out as to how they feel about that, waking up one day and finding out that they're landlords themselves. And this is all whilst smaller landlords are exiting the market. In fact, over 30,000 exiting over the course of the last year. So just wanted to give some context to anyone sort of joining us right now. We did talk about the overview of the build to rent market and how that is, of course, bringing in big money. When we look at the macro side of things, looking at second quarter of 2024, saw 1.2 billion investment activity, especially when it comes to the single family homes. I have a question from Samantha. Is demand of long-term rentals will decrease with more people turning to short-term rentals? No. The answer is no, Samantha. The short-term rental is a completely different target audience. So you shouldn't be worried about demand on the long-term rentals. Absolutely not. And as I said before, there is interesting documentation and stats that have come up through Airbnb, and as to whether there is any truth on the long-term stock being pulled away by bringing into a short-term rental, and whether the government has sold us a lie, if there's any truth to that. If you want to find out about that, make sure you do watch the next video coming out in a couple of days. So make sure you subscribe. So Samantha, no, it won't decrease as a result of short-term rental. No, the answer is absolutely not. I hope that helps. So going back to Saville's document with regards to the build to rent. So we can see that overview there. And a key reason, the lack of supply in May 22 were 29%. Okay, we read through this already. Demand is high, but rental growth is slowing. So this can go to your question, Samantha. And it's very important to note this because there is a difference between demand going down and the rent growth slowing to going down. So rent is certainly, as far as I can see, rent is in no way coming down. But the growth, the speed as the growth sort of going, it has slowed down. So that is something to make sure that you're noting. So as we look here, in the wider private renter sector, annual growth across the UK has slowed to 5.8% in May. While this is more than double the 2012 to 2019 average of 2% per annum, it is less than half its peak of 12% in July 2022. And of course, guys, we are looking at this from a macro point of view, the whole of the UK. But when you break this down currently as to what areas are growing more, you can see that London, for example, has slowed down more in comparison to other areas in the north of England. So different dynamics happening there. Rental growth has a close relationship with earnings. And so the double-digit rate of growth seen recently was never sustainable. The market is returning to its core principles. And that's a good thing for both landlords and tenants. Locations with good transport links, strong connections to employment hubs, and homes priced in line with local incomes continue to see the strongest rental growth. This includes Rochdale and Harlow, where annual growth to May is over 11%. So the RICS sentiment survey, which tends to be forward-looking indicator for rental growth, showed a large majority of surveyors reporting increase in tenant demand in May. So rental demand is here to stay. I mean, we know this, especially when we look at these corporate companies enter into the market. We do know that following the steep rise in student numbers since 2019, we will see 4.7 million graduates between 2023 to 2024, assuming a 10% dropout. Here's an interesting thing, though, guys, talking about students, and we were discussing this in the previous video as well. There are regions in the UK that have traditionally brought in many students. But it was interesting to see that recently, in parts of London where typically there is a lack of properties during the student season, I was seeing a lot of properties. And I don't know if there's any truth to this, but we're still digging into the research that a lot of students are actually choosing not to come to London. And that's for a combination of being more expensive, but for some reason as well, I say some reason. And again, I don't know if there's any truth to this. So perhaps coming back to this, in London, it was not all it's cut out to be. And especially when it comes to security and safety of young people, there seems to be a concern or a growing concern on that. And there are students choosing to go to other parts of the UK where their money will go much further. So it's interesting. It will be interesting to continue to dive in as to whether there's any truth to that, because I'd very much like to find out the reason for the amount of stock available, which is very unusual in certain regions of London, where typically students are really snapping up those properties. So going back to talking about students. So we see following steep rise in student numbers since 2019, we will see 4.7 million graduates between 2023 2026, assuming a 10% dropout rate. The rental market will need to accommodate many of them, particularly in London. And we'll be finding out again Manchester and Glasgow, which gave a graduate retention rates of 41%, 50%, and 54% respectively. It is vital these areas are planning enough supply to match future demand. UK build to rent investment, the second quarter. That is a mouthful. So the second quarter of 2024 saw a jump on investment activity. Nearly 1.2 billion investment marks the second highest level of investment in any Q2 on record. So there's a lot of confidence there. Of course, the deals completed will contribute nearly 4,500 build to rent homes. The majority of deals were for funding future development, 74% rather than into stabilized assets. So are we going to end up with a oversupply of properties in the UK at some point? And if so, how is that going to impact smaller landlords who perhaps may not be able to ride out in comparison to the corporate companies? I believe that that's the big question that a lot of landlords are asking. Yet what I would say is perhaps cross that bridge when you get to it, because at the moment, even if they are building a lot of properties, they're playing catch up. So from a short-term point of view, landlords don't have anything to worry about. From a mid-term point of view, I think landlords need to remain competitive. Mid-term being 3 to 5 years. Landlords need to remain competitive. The stock level, we're playing catch up to be able to meet the growing demand of rentals. But then the longer term, sort of, 10 years, that would be something that I would love to do some research on as to how that looks like, especially when we look at smaller landlords. I don't see any further questions here, guys, but I am going to jump into our next one, which again, some of the institutional organization jumping into the build to rent is the likes of John Lewis. This is in no way breaking news from back in 2022, but I just wanted to give this some context of John Lewis entering into the build to rent sector. The homes would form part of the UK's growing of the UK's, I don't know, where was I? part of the UK's growing build-to-rent property market, as the partnership seeks to raise standards in the rental property, both through its role as a developer and with the commitment to manage the buildings itself. So, of course, that's going to come with the branding of John Lewis and the standards that they bring into the retail market. They're going to bring in the same standards into the private rental, into the rental sector. Anyone out there wanted to live in a John Lewis build to rent accommodation and receive that 5-star service? I don't know. Leave me a comment below. Be interested to find out the prices as well and what type of target audience they're looking to bring in. So there you have it, guys. Banks, big corps enter into the market, including institutions. And what kind of impact this is going to have. We talked about the impact to landlords. We're talking about increased competition. Yes, with banks and private equity firms like Blackstone entering the market, smaller landlords may find themselves competing with institutional investors. Number two, a pressure on rental prices. Corporate landlords often provide higher quality services, amenities, and professional management. So you're going to up your game. It's not only about, here's the keys, Mr. Tenant, move in. What are you going to bring to the table with your tenants? We're already seeing that now. Forget the future. It's really what you're bringing to the table. How are you kind of retaining those tenants in not going elsewhere, not only from a point of view of the property itself, it's also how quick you are to manage those problems that the tenant has, how much flexibility you have with those tenants, and so forth, and what amenities perhaps the building where you are offers. And if you don't have those amenities, how can you be creative? Maybe you offer sort of discounts in the local area and make it part of incorporating it within your rent. Because remember, guys, if you have a property that doesn't offer any amenities and you have another competitor who does offer that at a higher rent, you're not going to be able to compete with that and charge the same rent. So you're going to have to be lower or offer incorporate something in it. Decreased property availability for small landlords. So as banks, institutional investors acquire more properties, traditional landlords may find it increasingly difficult to purchase new rental properties. I mean, that's certainly true when we talk about new builds. So as they continue to kind of buy out more plots and build these developments and potentially even buy newer units, then landlords may find themselves in competition with these big corps in whereby they, buy these units. But what I've seen mostly, to be honest with you, is them building out the whole block themselves. But there could be an element of the former. Potential regulatory changes. As corporate landlords take on more significant role in the rental market, there could be increased scrutiny and regulation aimed at professionalizing the sector, which is something we're already seeing, guys. We're already seeing the sector being professionalized, especially when we have that renters' right bill. I was going to call it the renters' reform bill, of course, which has been rebranded and repackaged. And if you've just joined, you do hopefully you know that on the 9th of October, there is the debate for the renters' rights bill. So look out for the next video coming out with regards to that and how those reforms are going to impact landlords. A lot going on, guys. So I have one more question that I'm going to answer here. And we have, of course, been reviewing corporate institutions coming into the rental sector. So we got here from Jonathan, how do changes in tenant laws like potential renters reform bill affect landlords' ability to manage their properties effectively? I've got two answers for you, Jonathan. Number one, you want to be a landlord who invests time in knowing what you're doing. One mistake could cost you thousands of pounds. We did a video, in fact, probably a couple of weeks ago, 3 weeks ago, of fines of up to £99,000. So number one, invest time. If you have an agent, then great. Make sure you pick an agent who has the reputation to be able to manage your property effectively, because we've got over 172 regulations and legislations currently, and that's going to grow after this bill is introduced. I can't see how any landlord who perhaps just does this part-time can keep up with all of that. So what we're seeing is a lot of landlords moving into management services because they just can't cope and keep up with the laws and the regulation coming up. Is this a good thing or a bad thing? I see it as a good thing. Regulation is good. It's time that the community and the country starts to see the rental sector as a profession, and so it should be and be treated as so. And I think those landlords who either don't invest the time or perhaps don't comply is just given a bad name to a landlords who do keep everything up to date and agents. I hope that makes sense. I hope that's helpful, Jonathan. I believe there's one more here. So we've got Tim, Robert. Hi, Tim. Danny, how can I attract good tenants in an increasingly competitive rental market? Get yourself a great agent, Tim, and just make sure that you're marketing the property well. Let's not forget that if your property isn't renting, it's always going to be down to three things, Tim. Number one is going to be presentation of the property. How does the property present itself? Number one. Number two, we got exposure. So you can have the best looking property in the world, but if it's not being exposed to the right audience, then no one's going to come in and view your property. And number three, dare I say it, price. If you've got these two right and the foundation right, but you're still not renting, well, then I'm afraid that you have a price issue. And then you're going to have to adjust the price of your property to bring in the right people. But that being said, I'm going to leave you with this. The biggest takeaway that we have with all these regulations happening, but also the corporate companies coming into the market, is that now more than ever, it's more important for you to choose the right tenants, because moving forward, it's going to be quite challenging to get your tenants out in comparison to previous times. There is, of course, the Section 8 that's going to be strengthened. We'll talk more about this, but there is a topic that we do touch very briefly on our previous video, so make sure you look out for that. Guys, have a great evening. Thank you for joining as always, and this has been recorded, so feel free to watch it back. Appreciate you very much, and have a safe rest of the week and evening. Bye.